welcome to another interesting edition of the Market Review, and to all our viewers, a Happy New Year 2022. We're trusting that this year will be a rewarding one for everyone. Today, we'll be taking a very interesting look at the review of 2021 capital market activities and the outlook for the year 2022. And to lead this conversation with me is Mr. Ebo Ayodeji of Chapel Hill, Denham. Nice to have you, Mr. Ayodeji, and Happy New Year to you.
Yeah, good morning and Happy New Year. I will look forward to an exciting and blessed 2022.
Thank you very much. We go on a break, and when we return, we'll take this very interesting conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back. If you're joining the Market Review show, today is the first edition for the year 2022. So Happy New Year to all of you once again. And our conversation is reviewing the 2021 activities in the capital market and what will be the outlook for the year 2022. With me to have this conversation is Mr. Ebo Ayodeji of Chapel Hill, Denham in the retail investment desk. So, Mr. Ebo, let's first look at the activities in the equities market. A lot of things happened. I mean, prime amongst those was the Nigeria Stock Exchange demutualization into the Nigeria Exchange Limited, the RECO, that's Regulatory Company Limited, and of course, the Real Estate Limited. And we also saw an improvement in terms of domestic investor participation from the trading pools of equity investment participation. And there were efforts to woo younger generation into the market because the average age of those participating in the market is 53 years. So we need to improve that. But for you, what were the other critical issues that stood out for you in 2021 in the equities market?
Okay, thank you. So I think the first thing is seeing that domestic investors continue to dominate the market, which reduced the volatility that our markets typically experience. We saw that on the back of the full year 2020 audited accounts for companies that were able to declare good dividend, we saw significant rally early 2021. However, we began to see a bit of a drawback from retail investors because there's also a limit to the capacity of the retail investors. So in 2020, rather, the upper year, we saw that significant participation from the PFAs, which we didn't see in 2021. So we believe that the trend that we saw throughout 2021 was due to less participation of the TFAs, and we all know that even the foreign portfolio investors, their participation has still been very minimal. Yeah. And as a result of that, that has affected in terms of the average traded volume and value in the market.
Very interesting, and I mean, it's a good one that domestic investors are driving the participation, but of course, like you said, we need to do more to drive the PFAs, and of course, also the foreign portfolio investors have a good balance. But let's look at the fixed income market, which is a space that you're very conversant with, Mr. Ebo. The yields, when you look at the yields, what's your assessment for 2021? On the other hand, we saw an improvement in the commercial papers issuance, thanks to the work that FMDQ is doing, and of course, the debt market activities, of course, non-interest finance, the Sukuk, Eurobond, of course, issuance, and of course, the DMO, FGN savings bonds. but what stood out for you apart from these issues raised?
Yeah, so looking at the start of the year 2021 for the fixed income market, we were starting from a very low base. We saw that rates dipped significantly and became a lot very unattractive in 2020. And we saw that jump from, when you look at the primary market auction for the treasury bills market, started from almost a low of 3-4%, went as high as 9.75% before accelerating again. So that really helped a lot of investors in terms of bridging the negative return when you compare it to inflation rate. Beyond that, another interesting thing that we saw in the market was there was reduced liquidity. And as a result of that, we saw even interbank rate going as high as 20-30%, which compared to 2020, where we saw banks were rejecting funds. So as a result of that, that really reduced the participation of the PFAs or institutional investors in most of the issuances. Yes, you highlighted that we saw a lot of commercial paper, but when you compare the commercial paper issuances we saw in 2021 was significantly lower than what we saw in 2020. Not able to recall the exact numbers now, but was there significantly lower because of the improvement in interest rates in 2021. Discouraged several investors or several companies from issuing that. But beyond that, we also, it's good to highlight that government also front-loaded in terms of raising a lot of funds in the first, second quarter, and that turned out towards the end of the year, which also we saw that impact on the yield environment. So by and large, it's an interesting year. I would say it's a year of two halves where we saw interest rates move up significantly before decelerating towards the end of the year.
Okay, Mr. Ebo, now we're looking at the year 2022, and it's called the pre-election year. The other developments that are going to happen, I mean, quoted companies, but in the financial institutions, we're going to see banks like Access transiting to a holdings PLC. We're going to see GTCO for almost the first year now as a holding PLC, also taking effect. The recent intervention of the Central Bank of Nigeria and FBN Holdings PLC, we're assessing how that will also impact the market. Several other developments, the direction of the monetary policy, also the fact that, yes, we'll be looking at the implementation of the 2022 budget. Several other things will definitely shape the capital market. So what are those things that you see that will really have impact on the equities market and fixed income markets in 2022?
Okay, thanks. So I think the first thing is that with the projected budget deficit of about 6 trillion, we expect that borrowing would be high in 2022. And as a result, interest rates would increase. We believe that in the first 2 quarters, government also want to front load. And as a result, we should see that improvement in the shorter end of the curve that when we look at last year, we closed at 4.9% for the 364-day instrument. So we believe that should come up to around maybe 7 or 8%. But beyond that, we also expect that with the low interest rates environment for T-bills, that will propel more commercial paper issuances, because when you look at the premium, the companies will be comfortable with that premium, and investors will also be happy to invest to reduce their negative return in commercial paper. So we believe that it's also going to be an interesting year. In terms of, we also expect that there will be a bit of volatility in the fixed income market, as we all know this year is a pre-election year. As news filters in regarding the contestants and how they emerge may also influence how investors also play the market. Pre-election year, you also see most people want to keep their investment outside the shores of the country.
Yeah.
And beyond that, I think lastly, part of what will also shape the fixed income market is the raise in interest rates in developed markets. We've seen that the Bank of England have led that path, and we believe that based on the projection, the US Fed is also expected to increase rates at least 2 or 3 times in 2022. So that will also reduce foreign inflows to emerging and frontier markets based on that attractive interest rates, which means that we may also see some investors also selling down, which will also push rates upward slightly in 2022. But what we should note is that government is also mindful of the rates. So we don't expect any significant spike in interest rates because they're mindful of the cost of the financing cost, which will impact on their ability to implement the budget.
Very interesting. And the regulatory environment is also very key, Mr. Bo. I guess you've seen the circulars that came out towards the end of last year on the regulatory fees that come on secondary market activities and even portfolio managers. How will those kind of regulatory actions and the regulatory environment really also shape the capital market activities, equities to fixed income and other aspect of the market in 2022?
Okay, thanks. I think like you rightly noted, we saw the charges, I think about 0.2% charges on mutual funds. There are also the charges for fixed income. There's also that charges for discretionary and non-discretionary portfolios. So what this does, the implication of this is that cost of transaction has increased, and the return that comes to the investors will also be reduced. And when you look at managed portfolios, you would discover that a lot of investors are skeptical in the first place. So trying to understand this is that what happens if the portfolio is making a loss? Do I still pay a commission on that? Yeah. These are some of the questions, because even for asset managers, management fees that they pay, and a lot of investors are really HNIs. They will prefer to indirectly manage their portfolio themselves rather than get asset managers because they are not guaranteed investments. So I believe that while the SEC has its revenue target, which is which has been propelled with the new structure of government of setting targets. So they are making most MDAs now are focused on revenue rather than delivering the services. So I believe that that's part of what has created this. And the implication of this is that we may see reduced activities in the market, and also because customers will be sensitive to charges or to fees. And most other clients, you look at the volume, they are trying to bring down transaction charges to increase the volume of transaction that comes to the market. So we'll see how that plays out this year based on this new development by the Securities and Exchange Commission.
Definitely, you're very clear on that, Mr. Ebo Ayodeji. The Securities and Exchange Commission, by structure, I believe, and by a memo to market from pre-share, should be more of regulatory capital market development. And I think the issue of targets or revenue should be something that should be reviewed in the SECAC, because we need that market supervision and market development to move this capital market to greater heights. So I think this issue of cost should be a very key issue to be discussed in subsequent capital market committee meetings in this year, and hopefully we can have a good agreement on this. But it promises to be a very eventful year 2022, and we'll monitor all the development activities, and hopefully we'll have you on board, Mr. Ebo Ayodeji, to continue to engage to discuss the developments in the market. Thank you very much, Mr. Ebo Ayodeji, for the time.
Yeah, thanks for having me, and have a wonderful 2022.
And same to you and the entire team in Chapel Hill, Denham. Thank you very much once again. And that'll be all for this edition of the Market Review, first for the year 2022. And once again, we thank all our viewers for being part of our show for 2021, and we're beginning the new year. Just want to assure you of continuous coverage of the market activities and developments. Just follow our website, www.proexchange.com, and log on to the capital markets. You will get all the latest stories covering all the aspects of the market. Also, follow our social media platforms displayed on the screen, and you will get latest updates. If you have any question or comments about the review of 2021 capital market activities and outlook for 2022, send them to utubasi.abasekong@proexchange.com, and we'll respond to you appropriately. Thank you for being part of this show, and once again, Happy New Year to you. Thank you for watching, and have a nice day.